Hey guys, so I get a few questions about sort of how much analysis I do on various stocks, and I thought why not combine that with a look into Atalaya Mining, because I haven't really sort of given my thoughts on them so far, and it's looking like it might be a sort of increasing position of mine. So yeah, I thought I would sort of look at what I looked into when I first came across them, when they were suggested to me in the comments, and sort of what I've been looking at since. So, for a quick look for starters, I would normally just come on to Yahoo Finance and just sort of double check the sort of stats on the home page. So, market cap, just sort of see what size of company we're looking at. Look at the volume, just double check you're going to sort of be able to get in and out of the position. You don't want it to be a sort of very illiquid sort of penny stock, or I mean, it is a penny stock, but there's a surprising amount of volume there, so it should be relatively easy to buy and sell. You can have a quick look at just see if there's any sort of recent news that Yahoo sort of throw up, just see how much sort of coverage they get. And I just sort of have a quick look at the analysis, just see if there's sort of much analyst coverage, and there doesn't seem to be because it's a penny stock, but they sort of give you revenue estimates and sort of an earnings estimate, but this is sort of going to be largely based on the copper price, so that's not going to be all that useful in this case. But yeah, nothing there that sort of throws me off from an investment point of view, so I would sort of look further into the company. So you can come to their website and have a little nosy around. I do find sort of mining companies don't tend to highlight too much of the actual mining because they see it as not very ESG friendly. So they'll talk a lot about sustainability and sort of green credentials and that sort of thing. But yeah, you can sort of have a look around. Nice that they sort of highlight they're basically a one commodity company, so specialist copper. There's potential from the looks of it to get into other metals, but they're basically saying it's all in copper, so that's quite nice. Operations sort of got a number of mines. You can sort of have a look around their gallery if you like, just sort of a few pictures of what they're up to. But yeah, I would sort of look a little bit further in. So you'd normally either go to the investors section and go to sort of reports and presentations, or it might be sort of called something different, financial information or whatever. But Atalaya actually put it all on the home page there, so it's the most recent sort of statements and announcements and bits and pieces. And yeah, you can come to sort of say the This is the Q2 and half one results, so the sort of April to June results and the January to June results combined. And this sort of gives you a bit of a highlight on their sort of figures. So saying they're paying a small dividend. You can sort of look at previous dividends. I don't tend to sort of focus all that much on the dividends. I would sort of generally look at the cash that's coming in and cash that I think is going to be coming in the future, and sort of the dividends would sort themselves out if that cash is increasing and doing well. I'm not too bothered about whether they pay a dividend or do buybacks or reinvest it if they think they've sort of got a lucrative opportunity. So yeah, I'm not all that bothered about sort of dividends going up or down. It looks like the dividend is going to be lower than the previous one, so might cause a sort of drop in the price at some point, or may have already caused a drop in the price. But yeah, I would sort of rather take a longer term view and expect the dividends would sort itself out. But yeah, they sort of give you a few new things that they're looking to do. So solar plant and the Elix plant, which I looked into a little bit further and we'll come back to. But yeah, they give you a quick sort of highlight of their sort of shortened income statement, if you like. So revenue slightly decreased from second quarter last year to second quarter this year. And for the full half, again, slightly decreased. This is mainly sort of due to the lowering copper price. So if you look at sort of 2021, the bulk of 2021 was sort of higher than it is this year. So pretty much for the whole of 2021, you were at sort of $4 or so per pound. Even though they're a Spanish company, it's everything's measured in dollars per pound generally with copper. No one sort of has their own figures and measurements, but yeah, you can see copper is sort of a fairly volatile priced asset. It's all got, 10 years ago you were at basically the price you are now, and it sort of came down to $2, back up to $3, back down to $2, and then in this last year you've had this sort of $4.50 range, and sort of back down to $3.50. But yeah, I'm fairly sort of bullish on copper in the long term. I've sort of been over that elsewhere, so happy to be investing in a copper miner. Yeah, so that is going to sort of distort some of these figures. So they've had their costs going up and sort of copper price coming down. So revenue has decreased slightly, but the sort of EBITDA and net profit is sort of come down quite drastically on the quarterly and the half year. So sort of for another linear growth company, that would obviously look terrible. But yeah, with a miner, you have to sort of reflect on the sort of underlying commodities price. So it's always going to be worse than that. You can maybe get up 2020's report and sort of previous reports and sort of compare it to that. You can do that in Yahoo Finance, for example. It's best to sort of double check within Yahoo Finance on the currencies because they don't always line up. So Atalaya are listed in London, so the market cap and everything is in pounds. But being Spanish, they report all of their sort of figures in euros. So you don't want to be sort of using this against the market cap necessarily, unless you just convert the market cap into euros. But yeah, you can sort of see actually not bad revenue growth numbers. So sort of coming up to a lovely last year, which sort of relatively follows the copper price. But it's best not to get sort of too excited about some of the more recent figures. So, for example, the net income, 133 million, obviously is going to be largely sort of due to the last year's very high copper price. So you can easily sort of fall into a value trap of thinking 330 million euro market cap and sort of 133 million euro profit. They're obviously not going to be sort of getting that at the moment, so you can come into the quarterly and sort of see, middle of last year you're getting 32 million, 38 million a quarter, sort of come down to 28, 18 and sort of 12 million with their sort of rising costs, inflation and sort of oil and gas costs, that sort of thing. So yeah, 12 million for the most recent quarter. Again, you sort of want to double check these just against the actual figures on the report, just to double check Yahoo isn't sort of pulling the wrong numbers. So like 93 million revenue matches up with their recent report, and sort of net profit say of 18 million, 11.8 million matches up with their net income. They've got 12 million, but if you drop down, they've just included minority interests. So the net income sort of figure is basically the same. Sometimes I have to drill down some of these drop downs, but yeah, it's all broadly the same. So yeah, obviously with the even more recent copper price, if we look at the last year, so the Q2 would be April to the end of June, and yeah, it was coming down sort of in June, but you had sort of a couple of relatively good months. April was sort of still in the $4.50 range, and May sort of in the lower $4 range. So Q3 is going to be quite a fair bit worse than Q2. Could even be sort of bordering on a net loss when they actually report it. So with a miner, you would want to compare the underlying sort of commodity price with their all-in sustaining cost. So you can come to the report here, look for AISC, and yeah, so in Q2 their average all-in sustaining cost was $3.33. Q2 last year it was $2.52. So it's come up quite a bit with these increased costs, and sort of 345 for the average during the first half of the year. So it's come down slightly in Q2 from Q1, but still fairly high. So sort of 345 for the year, for the first half of the year so far. We're at sort of 350, 360. We've been below 345 for sort of the last few months. So if they stay with that all-in sustaining cost, you're effectively loss-making for any periods that were under 345. They also give you their projected all-in sustaining cost, which is something you'd want to look at. So outlook for 2022, and they're saying sort of between 325 and 345 per pound. You'll see cash costs are a little bit lower. That sort of doesn't include everything. So you'd want all-in sustaining cost really, and they are saying this is based on a fixed sort of range of electricity, which could go up or down depending on what is happening at the moment. So Spanish electricity is sort of in a little bit of turmoil at the moment, as you can expect. But yeah, sort of 345, maybe 325 on the low end. So you could sort of see potentially a very sort of flat, potentially even loss-making year from what was looking sort of very good, say 98 million in the trailing 12 months net profit. So without the sort of analyst coverage to give you a rough idea on profits, you could sort of do a quick and dirty calculation if you like. So say we sort of stay around the 360 range, sort of optimistic, maybe comes up a little. You know, you could see you making 20 cents maybe if we're at 345 costs. So you come to how much they are mining for the year. So you would want to come and look for their outlook for the full year of production. So 52,000 to 54,000 tonnes. So yeah, if we're talking about sort of 20 cents per pound, so do a little quick and dirty calculation. You've got 2.2 pounds per kilo to get it into kilos. So say 20 cents times 2.2, so you're talking 44 cents per kilo, times 1,000 to get it into tons, and times 52,000 tons, say, on the low end. But 22.8 million net profit against market cap. You have to convert the market cap into euros, as you say. Say 367 million market cap by 22.8 million euros. So yeah, 16 times earnings potentially for this year if those figures sort of stay as they are, which are a little bit pessimistic figures, but I always think it's best to just be a little bit cautious. But yeah, compared to sort of other miners potentially, that's not all that good, but that does give you the sort of potential upside if the price, sort of copper price, goes up, because they're sort of leveraged, if you like. They call this operating leverage. So the more they can either bring those costs down or the copper price increases, suddenly they're making a bigger margin increase, if you like, than the sort of larger miners, if their costs are at sort of $1.50 rather than $3, then copper price going up doesn't make quite as much of a difference to them as it would do to Atalaya. So it's worth thinking about. You would want to net off the sort of cash and debt to get to what we'd call an enterprise value. That's sort of something I would normally want to do. They do actually give you it in the statistics tab here, but it's always worth, certainly for the first time, just double checking it yourself. So they actually give you total debt down here, but you can sort of dig into the liabilities and assets. Best to just stick this on quarterly as well, so it gives you the most recent data. And yeah, come down to sort of current debt and capital, and long-term debt and capital. You can exclude. I would normally exclude capital lease obligations, because that's basically renting your properties. So that's not really debt. That's not going to go away as such, unless they want to buy the properties outright. So I generally drill down and just look for the debt. So you've got 43 million in long-term debt and 16 million in short-term debt, so about 60 in total. And come down to current assets and cash, looking at 126 million in cash. So that's rather nice, covers the debt just over twice over, which is quite nice. And yeah, sort of total liabilities even of only 170 million. So even just the cash and cash and inventory pretty much covers total liabilities. So including everything long term and the short term, which is quite nice. There's sort of various ratios and sort of ranks I would put to this. Sort of obviously cash covering current debt and long term debt is quite nice. Current assets covering long-term debt and current debt is sort of okay, but not great, of course. Cash covering total liabilities, which some of my companies like Sylvania Platinum do have. That's the sort of gold standard, if you like. Cash, just the cash on the books could pay off basically everything they would owe to anyone. But we haven't got that here. It's not quite that good, but still pretty good. Current assets covering total liabilities is quite nice. So that's sort of including inventory and sort of invoiced goods and that sort of thing. And yeah, often you won't get that. You will sort of have cash with larger companies not covering anywhere near the debt. Cash might be sort of a third of the debt they've got on the books, say. But I kind of like sort of either one of those ratios, sort of current assets covering total liabilities, or sort of cash covering long-term and short-term debt combined, especially in a sort of rising interest rate, rising inflation market. So yeah, that's nice to see cash sort of more than twice covering current and long-term debt. So in theory, you could net that off if you like. Take 60 million off the cash, and you could knock 66 million off the enterprise, off the market cap, to get sort of enterprise value. And that's sort of roughly what they do if you come to statistics here, but it's sort of a little bit lagging. So they've reported the market cap at 313, actually at 314, but often if you look at these, they will sort of vary a great deal. Not really sure sort of how far back the market cap and enterprise value do sort of go back, because with the sort of volatile stock, they can be quite different. But yeah, just nice to sort of know the balance sheet is sort of looking reasonably good. So some other bits that you would maybe want to look at in the report for a miner would be sort of the grades of what they're mining. So this will sort of determine how much they're going to get out of the mine, and also the cost. So sort of a higher grade of copper is going to mean sort of more copper per sort of million tons, say, of ore mined. And yeah, sort of comparing this to previous year, it has come down a bit. So the grade has come down, and sort of the total amount that they've achieved has come down a little bit on the sort of quarterly and on the half year. So you may want to sort of look into why that is and whether it's going to sort of increase going forward. As I say, they sort of give you an outlook for the total for the year, so you can compare that to sort of previous years, and they'll sort of give you a few sort of highlighted figures, and they'll normally give you sort of a reason for the lower production or higher production if it is, and sort of measures that they're looking to do to rectify it, which is worth just having a check on. So as I say, this would be very specific to Atalaya and not really any other company, but sort of the key driver in their profit at the moment has been sort of input costs in electric. So continued conflict in Ukraine and impact on energy markets. The electricity cost has increased significantly. So reached €500 per megawatt hour in March 2022. And has sort of moderated and averaged 190 in April and May, and in June the legislated cap in Spain and Portugal took effect, and it's sort of come down to 145. So it's huge range sort of at the moment. This is causing issues for a lot of companies. So yeah, they're going to be looking to get that down any way they can. Part of the way they're doing that is building a solar plant for themselves, rather than sort of taking energy for the grid. So 50 megawatt solar plant, a reliable source of low cost and carbon free energy. And yeah, they're saying sort of orders have been placed, delivery of materials to arrive on site in Q4, and start up of the solar plant in Q2 next year. So they've spent €11 million on this plant so far. So they're saying the solar plant should bring 35 cent per pound reduction in the cash costs and the all-in sustaining cost. So that should help. So their full year forecast for 2022 was about 345, and yeah, they're saying if all else stays the same, which it wouldn't, they're looking at sort of $3.10 on the high end once the solar plant is finished. So that should help things. And then, as a bit of research and development, I guess, they are developing a sort of new refining plant, which they're calling the Elix Phase 1 plant, which will produce high-value copper and zinc from complex sulfide concentrates within their mine. So this can increase metal recoveries, lower transportation because they're doing more on site and not sort of transporting it to other refiners, reduce carbon emissions and that sort of thing. So yeah, this is sort of potential for the future. So yeah, that's another thing to sort of potentially produce more and reduce cash costs and all-in sustaining costs, which is good. So as I say, I'd rather have them sort of spending the profit on this sort of thing rather than sort of doing buybacks or dividending it out. I don't particularly need the dividend at the moment. I would rather them sort of get their costs down and yeah, anything that can sort of help the long term, really. Normally, if you want a bit more information, you'd go to the annual report rather than the quarterly reports. So these are 188 pages. You don't necessarily sort of read through the whole thing, but it's good to sort of get some high level stuff. I'm always less keen on the annual reports than the quarterlies because they're obviously sort of less up to date. So you see here the 2022 guidance, they were saying 54,000 to 56,000 copper. So if you're sort of looking at that, then you're a little bit out of date because they've lowered that since. So yeah, there's lots of sort of things in the annual report that I don't like looking at too much, but it sort of gives you a good idea on the company. Something you do obviously want to know is where the mines are located. So for a sort of small company like this, you would expect not to be quite as diverse as some of the sort of large companies like Freeport and Glencore and people like that. So yeah, as I say, being a Spanish based miner, they've got looks like 5 mines, and they are all in Spain. So no sort of diversification, if you like, of location, but a bit more of a sort of calmer geopolitical situation, I guess. You've got basically no risk of sort of military conflicts, I would have thought, unless something crazy happens, compared to sort of other miners that are going to have sort of mines in South America and Africa and places like that, sort of more susceptible to internal conflicts and that sort of thing, civil wars potentially, and sort of more issues. But of course, the things you do have with Spain is sort of EU interference and sort of more of a ESG focus, really. So you get a lot of protesters, sort of very much against them expanding because they'll say these areas of Spain are sort of natural beauty areas, so they shouldn't be digging it up, basically. But on the other hand, they want wind and solar energy, so unfortunately, you need the copper. Very nice to sort of think it's just going to come from elsewhere, but I expect the Spanish government would rather it was coming from in house. So I kind of think some of these exploration projects will get pushed through in the end, even if the sort of protesters and the local councils don't necessarily want them. But yeah, so you can sort of come in and look at what's sort of ongoing. So they've got the basically the one project here, which is producing all of their 50,000 tons, and then sort of the rest are exploration, which is good. Always good to have something sort of in the future. You do want to know about sort of mine life. So didn't actually find this in the Q2 report, but I've come to the Q1 report. You do have to sometimes do a little bit of digging on these to sort of get the mine life, because it's not something they want to sort of put front and centre, I guess, unless it's something to highlight, something they're proud of. So Atalaya, I don't think it's something they're all that keen to show. So if you come to the Q1 results, they sort of did this comparison between sort of various other miners in terms of sort of free cash flow and enterprise value and that sort of thing. And they did a little comparison to this other company that got acquired by Sandfire. And if you sort of dig in here, they show you, they're sort of saying these lot got acquired and they had a reserve life, basically a mine life of 6 years. And Atalaya, they're saying, have over 12 years. So I would sort of take that as probably more like 12 years now. And resource life is sort of the potential mines that they own, but they're not currently sort of mining. So those would be the exploration ones. So 12 years, not all that good. The sort of larger miners, your Freeports and people like that will sort of have, often 30, 40 years worth of total mine life, because they've got sort of various different mines, larger mines and that sort of thing, more certainty in the pipeline for exploration projects. Obviously Atalaya just in the one country, and sort of a little bit less certainty. So yeah, that is a downside of the sort of reserve life being only 12 years. Sort of almost have to think of it like a flat, sort of with a leasehold. So if you buy it and sort of want to hold it for 5 years, say, when you're selling it, it's going to have potentially 7 years mine life left if they haven't got their sort of exploration projects on the go. So worst case scenario, you're sort of looking at 7 years left on the mine life when you come to sell it. So you've got to think about the person buying it from you. They're going to be thinking, well, I've only got 7 years. Am I going to be able to sell it when I if they want to hold it for 5 years, say, it's going to be near enough sort of end of life. So you always have to think about sort of down the line whether you're going to be able to sell it or not. So mine life is very, very important, and it is a bit of a negative for Atalaya. Yeah, just another sort of thing to highlight the annual reports being sort of out of date. So they're sort of showing their cash costs over the last sort of 5 years and sort of all in sustaining cost. Obviously, this goes up to 2021 being $2.48 and sort of a market copper price of 4.23. So this has obviously since come down to sort of 360 on the copper price and sort of looking at 345 on the all-in sustaining cost. So like I say, I do try and sort of get the most recent figures you can and sort of do some projections and that sort of thing. If I wouldn't necessarily trust the analysts on a miner, sort of do a little bit of maths yourself and have to sort of get there that way rather than looking at sort of outdated reports, basically. So yeah, I don't think. I mean, you can have a reasonably good look through the annual report if you like, but yeah, I think for some of the figures, it's going to be sort of fairly out of date. So yeah, as an initial look, that was sort of essentially what I did on Atalaya. I don't think there's all that much point really in doing sort of discounted cash flow models and that sort of thing, because it's not going to be linear growth. Basically, you can't sort of project sort of looking at the 10-year chart here, sort of 3%, 5%, 10% sort of annual growth when it's really going to follow this copper price essentially. I don't think trying to take an average of these prices sort of over the years and trying to sort of linearly project that into the future, in 2 years it could be $4 over here, in another 2 years it could be $5. I just don't think it's going to work like that. I think it's going to be sort of on demand for electric vehicles and solar and wind power and that sort of thing, and sort of how much the rest of the big miners are producing, as well as sort of costs and sort of potentially other miners going bust and that sort of thing. So yeah, I think you have to sort of largely base it on where you think copper demand is going to be going, basically, and sort of do a little bit more fundamental analysis on copper rather than Atalaya Mining themselves. Once you've sort of made sure you're fairly happy with their mines and sort of sustainable production and costs, then sort of largely comes down to the underlying commodity itself. So yeah, that's basically sort of an initial look at Atalaya Mining and sort of how I would initially look at a miner. Obviously, it's different for sort of every company. Fundamental analysis is going to be sort of very much different for every industry and every company. You're not going to do the same sort of research with Nintendo or something like that. You're going to be looking into sort of the video games industry and games sold and that sort of thing. Yeah, basically every company is different. You can sort of pull up data for rival miners and that sort of thing and sort of compare, as I say, sort of grades and mine life and that sort of thing. You could do the same calculations that I've done here, sort of all in sustaining costs and sort of how much profit you think they could make sort of going forward for the year, and sort of compare valuations on other miners and see whether you think it's good value. Yeah, interested in your thoughts on certainly on Atalaya Mining, and if you've got any questions on sort of research and that sort of thing, or you think I've missed anything glaringly obvious, yeah, certainly leave them in the comments below, and like and subscribe would always be helpful. So yeah, see you soon.